And then once you start seeing news hitting the headlines on grocery prices, just buy the grocery stores, because they buy cheaper than they sell when you have inflation. Okay, so even if they hold the inventory for a month, what do you call Safeway may just buy more than they need and hold it in their warehouse, because they know with the inflation of the goods and services that, hey, I may pay 1% a month holding this inventory, but if it's going up 2% a month, my company gains. So you're going to start seeing shortages at the wholesale level, while the grocery stores are going to be hoarding and try to drive up the price through with inventory management.
Good afternoon, everyone. Today I have Bob Kudla, tradelikeagenius.com. We come together each month to try to look out into the future a little bit based on what we've seen in the last month or two that we've also said might be changing as an indicator, how prices might move or society shift based on these giant patterns or some of the smaller regional influence as well. Now, right now, what we're looking at, China downgrading its crop forecast for the year. Russia already downgraded their output for wheat for the year. And the US, of course, downgrading every other day now because the actual losses are being put into the books now that were not forecast from the USDA, but regular farmers on the ground had said, well, USDA numbers are super high. In addition, China with the water woes and that mini series I did on Kyrgyzstan, Kazakhstan, Uzbekistan, and Tajikistan water issues, that's all in the border periphery area right there with China too. So it's east and west, and there's a lot of things that are not moving as efficiently. So when you start to see downgrades in crop forecasts from the EU, from Russia, from the United States, and now China, inbound, big problem. And then next year, the forecast is for less fertilizer. So that'll also nibble into the yields per acre per hectare. So how's this going to set 2022 up for us? And also, what do we have here? A new indicator Bob's putting out. So I'm really interested in that too, to see it's on the Fibonacci sequence. Bob's going to run us through that. So sit back, buckle up, and get ready for some 2022 forecasts. Drip in. Welcome, Bob. Thanks for joining.
Hey, thanks, Dave. Thanks for having me. Yeah, so I think 2022 is going to pick up where 2021 left, but now I think the bloom kind of off the rose here a little bit in terms of the narrative. China coming out and I mean drastically reducing. You're like 2 million tons for soybeans, and that has to be made up somewhere. That means they're going to be going after. They're going to be going after Argentina, Brazil, United States, looking for soybeans, and that's going to put pressure on. I mean, the farmers here are going to like it, but maybe they're not going to like it because we don't know how much more fertilizer is going to cost them to put on the fields next year, because ammonia prices are up 13x, and I think more than oil costs that are freaking the Fed out. I think natural gas costs are the ones that really are going to make the Fed start chasing this market down, Dave. And look, they have to figure a way to support the dollar to drive down the nominal cost of natural gas in the country. Because look, the Biden administration is not going to let people drill more, so they're going to try to manipulate it financially, and that's going to crash the stock market going into next year, because they're going to have to make it look like they're hawkish to get some of the speculation out of the markets. But at the end of the day, I don't think it's going to work. I think we're going to get the worst of all possible worlds: a stock market rolling over and energy prices that are stubbornly high, and that's going to reverb and make the economy go down, and you're going to get this vicious cycle just like we had in the 1970s all over again. So that's my viewpoint. The cake is baked. I mean, look at the weather pattern. So I don't think people are appreciating the fact that the cold has set in, and now the cold's in the ocean. And I'm out here in California. It has been freezing here for the last couple of weeks in terms of normally this is the time of the year we get a lot of Santa Anas, a lot of warmth. Because these are our warmest 3 months. June, July, and August aren't our warmest 3 in Southern California. It's basically August, September, September, October, November. And it's just been cold. And we're getting rain right now. It's fairly unusual to get rain this early, and we're in a La Nina year. So that should tell you all you need to know. And you saw Hawaii last week. They got hammered with the Kona winds, and that usually tells us that wet winter's coming when the Kona winds are starting to pump that atmospheric jet and point it towards the west coast. So I just think we're set up for a big problem, from a weather standpoint, economic standpoint, financial standpoint. And then if Russia and Ukraine come to blows, forget the United States involvement, that's the breadbasket. Russia and Ukraine have been acting as the marginal producer of wheat around the world. And, if they go to war, I mean, they're southern Ukraine, eastern Ukraine, that's the breadbasket. And so, you're going to have issues there. And, depending on how they shoot at each other, the ports in the Black Sea can get destroyed. So how are you going to move? How are you going to move the grain, right? I'm sure if Russia attacks Ukraine's not going to sit back. They're probably going to point their strategic missiles right towards that naval base in Russia, the one they took over, a couple of years ago. Those Black Sea ports are all at risk. They're all going to be shooting up at each other. So, it's going to get real on the food front. And so all tied to natural gas. And a lot of this is self-inflicted wounds from the Green New Deal nuts and basically the prolific spending that these governments have done is now caught up to them. And there's no easy way out at this point.
Yeah, the quick fact add in there for Hawaii, that was a blizzard warning, not just Kona winds. So for those of you to get that, to understand it, blizzard warning in Hawaii this early in the year. And there was no blizzard warnings for other parts that you would think like Idaho or somewhere up in Canada. There was no blizzard warnings there. There were blizzard warnings in Hawaii of all places. So you can really see that things are messed up. And this La Nina that you're referencing, it could go down in the record books as one of the top 3 coldest. It's still evolving. I mean, they're looking at that cold water all the way over into Indonesia proper areas now, out past what the normal Nino measurement areas are. It's extending past that all the way almost over to Asia now. Just the conjecture is, it's an unknown. Is this going to continue to amplify into the cool and it's going to really set things in motion? Or will it, run its course and finally pull itself back here coming up in March or April of next year? It's an unknown because nobody has had measurements that were that precise going back in time. We really need to go back into the 1850s, and you have to look at how accurate were they when they were dragging thermometers behind the ships compared to what we're doing today with satellite analysis. So we're getting into a whole bunch of different areas. But that being said, food is going to be the most important thing. And with these smash and grabs happening across California, they were targeted, at 5-star or, very high end establishments, Hermes, or, some of these handbags, a Gucci handbag shop got pilfered. Safeway supermarkets putting in anti-flash mob, smash and grab rob types of things where they have gates going in there now. So they could just lock gates down when people either try to come in or go out. That was my thing. When food gets really expensive, there's going to be troops stationed at all supermarkets and food distribution points, warehouses, etc. But now you can see Safeway taking the first step of, you see it in earnest now. Food is going to be controlled tightly. And with all these factors setting up, and Bob, you're no less than the 5th person that has said the same exact thing. Stock market correction, crash, whatever you want to term it as, fill in your adjective. 2022 beginning or Q1, Q2, no later. Most are saying Q1, somewhere around there. The food prices, that was the thing that with all the energy prices, everything else running away, food is not cheap like it was in the 1970s. I remember as a kid going at the $100 with my mom, and when we go shopping as a family, my sister, whatever, we'd have bags and bags and bags and bags of groceries for $100 coming out. That's not the same today. So when you look at all these food price increases, and heaven forbid they would go to war, because that would knock what percentage of global agriculture would get taken offline with a conflict with Russia and the Ukraine? Europe would be affected. Those two, Russia would be affected. Ukraine. I'm
Middle
just curious
East.
what the global amount would be. 12, 15, 20% of all food would disappear for a year. And the fertilizer shortages are in at the same time.
So it's more than that too, because Kazakhstan produces a lot of potash and they won't be able to get it to market either. So, you got to put that stuff on ships. You can't just transfer that stuff on train. And if those ports are blown up, and look, and Turkey's unstable. What if Turkey decides to have a Bosphorus Strait tax, right?
Oh,
Hey, look, the Turkish lira is imploding right now. So if you have Bitcoin and you're in Turkey, you're a happy person, or at least you're not an unhappy person. But if you're not, Turkish lira is going to become worthless here in the next probably a year or two. I mean, it is going straight up, and straight up for a currency against the dollar is not a good thing. That means you need more of the currency to buy a dollar. And so a lot of big problems there. And look, we're past it now. So now it's buckle up time. You and I started talking about this stuff 7 years ago. We said it was coming, it was coming, it was coming. Last year we said it was here. Now it's too late. Okay. You're on the ride. You're riding up the roller coaster right now. So you're gonna have to take the plunge. So
and hopefully it's not a double corkscrew.
Yeah, well, we used to say in the Marine Corps, embrace the suck because it's coming. And so you're gonna have to be prepared for it. And we are. So, in terms of positioning for the stock market, if you want to do your own homework, look at what went up in the 70s and early 80s, and what went down. And that's how you want to position yourself, because it's going to be really identical, because the Fed's going to be behind the curve. And at some point when they crash the stock market, they're going to have their oh damn moment, and they're going to just go right back to what they used to do before. But this time, economic activity won't lift; only prices will lift. So so you're going to get a twofer. You're going to get whacked in the head both ways with the way the Fed is operating, and our government is hopelessly entangled right now. There's just basically it's a Catholic and Protestant war going on in the United States, metaphorically, because both sides can't find a middle, and it's for the soul of the country.
Well, Bob, let me say, what kind of inflation are you talking about if that were to occur? Well, inflation, double digit, triple digit, hyperinflation.
I don't think we'll get that. We're at 15% right now. So I would say we'd probably go 25, 30%. I do all the shopping in my family, and really, other than packaged food and beef, you can still get my pricing is still pretty much the same, but you're starting to see that change now. So I saw the uptick now in pork. I saw the uptick now in chicken, and forget fish. You have to be rich to eat fish now. It used to be a poor man's diet. You can't touch any fish other than farm-raised salmon, but that you can't get for under $20 a pound. So I watch chicken prices the most, because that's the chicken and eggs are the last two what I call cheap proteins out there, and they're starting to tick up here in California. So if that goes, then I say food prices go from there. I think food prices on aggregate was like 6.2%, but depending on your mix of buying, higher or lower, but for sure we're going to be jumping up the 20-25% area. And what that means is that you have to stop buying other things. So what I tell people, when you break down the economy down, is that you have stocks that are what we call essential, right? Everybody's used to essential, non-essential now because of the COVID. Essential means things that you're going to have to buy regardless. Okay. And then there's non-essential goods and services, things that you'd like to have if you had the time, the money, and the wherewithal, right? So the non-essential services are ones that are going to get absolutely pummeled in this environment, and non-essential services are like vacations. Okay. Go get your nails done, haircuts, getting your going to tanning salon, chiropractor. Some people say it's essential, but hey, if the choice is being able to keep your health insurance and going to a chiropractor, you're dumping the chiropractor. Okay. And if chiropractors out there, I'm sorry, pets, all things pets, right, will will take a hit. We went to last recession, people were just letting their dogs and cats go outside, just abandoning them. And so, and you'll see that again, because, that's very expensive. So those are the things, and those are the areas of the market that are going to struggle. Okay. And then everybody's going to be forced into the, basically the four horsemen of the economic apocalypse, right? You're going to spend all your money on food, rent, healthcare and energy. And that's it. And it's going to be a miserable couple of years until they figure this thing out one way or the other.
Yeah, Bob, can I jump in with a thought here?
Yeah.
The US, we only spend, like you say, aggregate 6, 7, I'll even top out at 8% maximum for all the money that you make in a single month. About 6 to 8% of that is spent on food. And that's some of the lowest in the world. But when you go over to other places like Pakistan, they're spending 45 to 50% of everything they make every month on food. So these types of rises in price are not just going to be exclusive to the US. They're going to be a global phenomenon of all food prices rising. So, when you're looking out at that wider landscape, where would you anticipate social unrest to unfold and be seen first? Because you can't have over 100% of somebody's wages just to pay for food. It's not doable at all. And at the price rises you're talking about, another 25% on top of that, or even 30%, they're looking at a full 80+% just to eat every month in Pakistan. That's not going to work. And you could just, copy paste that across so many other nations where it's, 35%. Well, what if it goes to 55? There's going to be a tremendous amount of, anger amongst the populations of the world because their food's risen too fast. And then you add the energy on top of that and the possible non-delivery of goods. And it's a toxic mix right now.
Yeah. So the way you look at it is you look at the food import percentages by country. So the more food that you have to import as a country, if you run a trade deficit on top of it, you're the ones that are going to be the most impacted by rising food costs and rising energy costs. So, you look at countries like, I think India is very vulnerable because they have to import food and energy. Hence the big push for nuclear, by the way. Everywhere in the Middle East, and MENA, right? They have to import food and energy. Well, not every country in the Middle East, but enough of them, and but all have to import food. And so, those countries are going to be at great risk. Asia, they have their food, but they don't have their energy. So those are the countries that are going to get whacked the hardest. And you're talking spring rain, kind of the Arab Spring kind of a thing. It's going to be the worldwide winter coming up. Now, countries that'll probably be relatively okay, but even though it's bad news, right? The United States is going to be the one-eyed king in the land of the blind. Ironically, Russia will be well positioned because they don't run a deficit, number one, and number two, they can produce enough food and they can produce enough energy. And if push comes to shove, they can just go down and invade Kazakhstan and take their potash and uranium if they need to. So they got resources right next door, and Kazakhstan will be powerless to stop them if they're so inclined. And so Russia would actually be sitting in a catbird seat in this situation. Probably why we're going after them so hard, because they kind of know that they're sitting in a more dominant position because of the way in which they structured their resources and their economy. Brazil probably be in good shape. Argentina never is in good shape because they take everything in Venezuela. They're two peas in a pod. They take the richest countries in the world, and their politicians have destroyed them. But Brazil will be sitting in pretty good shape. Chile probably good shape too because of their resources, and they're self-sufficient as well. But I say Southeast Asia is in trouble. China, I'm a broken record. China Evergrande just defaulted today.
Again,
right? Their property, 30% of their GDP is property development. Okay, that goes away. China's no longer as big as the United States. Now China's 30% less than the United States, where we all knew that intuitively. And then if they have to import food, which they sound like they're going to have to, and they have to import energy, which we know they do, then it's going to be an interesting environment. So, knowing that, my investment thesis has not changed, Dave. I'm adding to my uranium positions on any of these consolidations or pushed down in price. And now going in December, January is when you want to start buying fertilizer stocks again, US. And then once you start seeing news hitting the headlines on grocery prices, just buy the grocery stores, because they buy cheaper than they sell when you have inflation. Okay. So even if they hold the inventory for a month, their carrying cost, and oil they do this in oil a lot. Safeway may just buy more than they need and hold it in their warehouse, because they know with the inflation of the goods and services that, hey, I may pay 1% a month holding this inventory, but if it's going up 2% a month, my company gains. So you're going to start seeing shortages at the wholesale level, while the grocery stores are going to be hoarding, and try to drive up the price through with inventory management. They do it in the oil market all the time. They hold oil off of tankers all the time, because it's cheaper to pay for a tanker lease rates, knowing that the next month when you release that oil, it's going to be at a higher price plus what you paid to store it. So that's what's going to happen here on the food side. It's a phenomenon people haven't seen for over 50 years, and it's coming again. It's going to be brutal. So, you talked earlier about the guards at the grocery stores. That's not where the smash and grabbers are going to probably do that, but you're going to have organized gangs just trying to take down the trucks.
But everything within the movement of that chain of food from could be the farm itself. In Thailand, they had to station guards out because people were going in with combine harvesters and harvesting entire fields of rice while it was still in the plant form, in the dirt, in the field. So they stationed troops out there, and everything in between. And a blast from the past for those of you Maunder Minimum fans. 1680, 1660, 1665 was the year. They were attacked almost 100% of the time. The most dangerous job was being a soldier guarding the grain shipments into the city. 100% attacked 100% of the time. The most dangerous position, 1665 British Army. So where it's already gone and passed. So where it might go again. And these people are pretty organized. It seems that they're becoming lethal groups of people going out to target a whatever XYZ good.
Yeah, they're going to hit the trucks, but we can't stop that ourselves. And but I want to show you, because I know we're a little short on time. Yeah. Dave and I love the macro. And even if we didn't have this service, Dave and I would probably talk every month anyway. And because
sure.
we just love this stuff. And but it informs my trading, but it doesn't guide my trading, because I use our system, which is a series of algorithm, money flow and trend. And I shot a new indicator. I gave it to Dave. I don't know if he could throw it up on the screen, but so this one's Bitcoin, and I know a lot of you guys that follow Dave love to trade cryptos. And so what we've done here, this is a 4-hour chart, is a Bitcoin that just shows you where the trend is. So when the bar on the left hand side is green, we've been in an uptrend, and the bar over the price is basically it's framing out its support and resistance. Okay. So when you see those little black triangles, those are areas to take your shots long, and then you set your stops, and your target would be, if it got up to that top line, is that it's overdone on the move, you get out. But then what happens is you get the trade, it flips, and you notice now the red bar on top. So now you went from buying dips to selling rips. Now Bitcoin, some people can short it, some people can't. This is where you probably want to go ahead and buy Mara puts, right? And if you would have bought Mara puts when this flipped, you'd have made a fortune, because Mara went from basically 80 down to 37, 35, I think even, in this move down. So, so you look at, okay, now that it's fallen, now you can see these little green buttons that basically is a continuation buy, continuation buy. Those are what called counter trend trade areas. So if it goes down and it touches the red bar, you can take a counter trend trade, or if it goes you get the green button, you can take a counter trend trade, so on and so forth. But you're in a downtrend. So you want to, you don't want to hold the trade in that situation. And so that's all we do is what our system is, that we just simply look for these trades. Now, the ideal setup for us is when it flips from red to green, and you start buying the dips back up again, because that's the easier trade. It's harder to short a market, but I just want to show Bitcoin because people trade, the current of the cryptos with you a lot, Dave.
Yeah. So let me ask you, Bob, here. I'm looking at the chart and it shows on the 9th here. Are we looking for another downtrend or
yeah,
to the downside on Bitcoin here?
Yeah. And so we have our buy limits in set at 42,500.
So you think it's going to scrape 42 before it bounces off?
Well, we don't know that, but this is Fibonacci telling us that this is the most probable outcome, is for it to go down and touch that red line. Okay. It doesn't have to, but that's the one. If you want to have the best, what's called risk reward setup, as of today, you wait for this 42.5 to make your shot to buy again. You can do different time frames and you'll get a different number there. Does that make sense?
Yeah, it does. Because, if you're using this Fibonacci sequence, would be based on different movements of time and price.
Yeah. So it's different. Yeah, exactly. And so, we like to trade on the hourly to 4 hour to daily on crypto. And so I'm patient enough I'll just simply wait for that trade, because we did this last time. We were buying at 27.5, Dave. Okay. And it went up to $68,000. So, and if you try to buy ahead of that, you just kept getting chopped out and stopped out. So this takes more of your FOMO instincts away from you and really frames it for you. So, we're all about math, and here's math. All right. This is math expressing itself as art. Okay. And if you just follow this, you're going to make money. You can't help not to make money. Okay. But you have to follow the system, and our system's available for people to purchase access to this. Just go to tradelikeagenius.com and you go ahead and buy one of the bundles. This is going to be one of the packages that will come with one of the bundles, and you have access to what I call our ribbon system and our range trader, and it'll just put you in really good shape to make the trades. And we'll teach you how to use it. We have training packages, we have chat rooms, and then we actually put out trades every day too. So that's how we manage the system. And we have specials running till December today's Thursday to the 11th. Take advantage of them. 65% off. If not, you can buy individual items, 40% off. Use promo code Christmas. The big bundles are already pre-discounted. The unbundled is 40% off whatever retail price it is. So that's what we're doing. That's how we're working it. Our view now is that we're going to get probably a deflationary impulse in asset prices. Okay, because the Fed is now determined to limit the inflation damage. So we're going to probably be downdrafting here a little bit. Energy is going to remain sticky. Food is irrelevant to whatever the Fed can do, because the Fed can't print food. And so food's going to do what food's going to do. Energy is going to do what energy is going to do. They can affect it at the margin, Dave, but it's a supply and demand thing. It's going to overwhelm anything the Fed does. But everything else is now consolidating down.
I just want to get one last little tidbit from you here. Gold and silver, how's this going to react?
Yeah, they don't like a rising dollar. So gold and silver is going to, basically gold and silver will react negatively until it doesn't. I mean, it sounds like a cop-out answer, but that's what happens. At some point, the 10-year yield falls enough that gold doesn't care about the dollar, if that makes sense. So gold cares a lot about what's called the real rate of inflation and real rate of cost of interest. So the bigger the delta between those two, the better gold and silver perform. And so we're at a point now where gold and silver really isn't really going down as they push the market down, which is telling us maybe the spring is about ready to be snapped, but they're still able to blow up the gold miners and the silver miners when they knock the market off. So I think the first big flush, we had one last week. You saw the flush in the market. They bought that one back, but they didn't make all-time highs. So that's like screaming warning flag. So this next move down, if it makes a lower low in the markets, gold and silver miners will go down with it, but they'll be the first to recover, just like in 2009. And that's where you're going to want to be, in your speculation. So for me, it's my life's simple. It's basically food, it's uranium, it's going to be gold and silver miners, and it's going to be platinum and palladium miners when the dust settles. And I'm accumulating long term in those areas and fertilizer stocks for trade here in December, January. So that's where I'm at, Dave. And I think those are good areas to be. Tech stocks are going to get absolutely destroyed, and anything else that's not that are going to have a really hard time moving up, other than these spectacular 1 or 2 or 3 day snapback trades.
And a wild card to finish us off here, my friend who does Eurodollar trades, and Eurodollar futures indicator, the curve has been flat and then it turned negative December 1st, December 2nd, December 3rd, and then that slope steepened downward. Last time that happened was December of 2006 and June of 2018. So do the math on that. You're looking within a 5-month period of something happening based on Eurodollar future indicators.
Yeah, the
wild card,
Eurodollar,
take it for what it's worth.
Yeah, the Eurodollar always is 6 months to a year ahead of the markets. So it's always a warning. And you're right. Look, at 2007 is when the earthquake started, the foreshocks. 2018, that fall and winter, 18% decline. So take the warning seriously. Look, this 2022 is going to be a tough market. And I mean, for people in their lives. But if you get in the right trades, you're gonna do just fine.
All right. I'll leave that link in the description box below. Chase down some of the information. Go over and visit Bob's site, tradelikeagenius.com. And hope you got something out of the video. Leave some comments in the description box below if you agree, disagree with how we're looking at some of these things unraveling or coming together, whichever way you want to look at it, moving to the future. It all does seem to be kind of intersynced with each other and overlapping effect from the causes. So see you next month. Bye for now.
Thank you.